5th January 2023, Thursday. Gosh, it's really happening right now. Oh, I really hate it when actually I get it spot on at times like this. Remember, just a couple of months ago, I was just telling people this, that there will be a sudden slew of unemployment coming in. And at the time when I was sharing about this as well, people like say that, Kel, you are really too pessimistic. There's no way economy is doing well, blah, blah, blah. But I already said this, the way how economy works is that once you increase interest rates, okay, earnings will be affected. And then after that as well, the company to retain their earnings or at least their so-called market share, what they will do, they will likely cut employment. And I've been saying this for quite a while, and it's now really happened. Because as of this morning, Amazon just confirmed that they're cutting 18,000 jobs, and it could be more than that. In fact, it was 10,000 at the start when they were saying about this. Then in fact, last night was 17,000, and in fact, this morning was updated to 18,000. Oh gosh, today's video is really must watch because there's so much information that I need to share with you. It could be a 30-minute video, so let's watch it today. But once again, guys, disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship. Now, let's recap what happened last night first. Okay, so last night, the Dow Jones up by 133 points, the Nasdaq up by 52 points, the S&P up by 28 points. Hey, it's good, all right. Yeah, everything was good. But if you look carefully, you will notice that Microsoft was down by 4.37%. Oh my goodness. I mean, are they rotating among themselves? We have the first one, we have Tesla going down, right? Last 2 nights ago. Then after that, Apple came off. Then now we have Microsoft, and most likely you're going to see Amazon and later maybe Google. So all is doing rotational play, and the Wall Street, in fact, every last hour, they'll try to pump the price up itself to make sure that thing ends positive. But we all know that things is getting really bad, all right? So yes, indeed, it was a very choppy session as what we saw. And of course, the Federal Reserve meeting minutes shows that they are not looking to have any interest rate cut this year, okay? This is something that Wall Street have been really hanging on, and they keep on believing that the Federal Reserve will actually buckle on this. I tell you, they won't. Because we must understand, the only way to really reduce the trade deficit between themselves is to basically increase basically allow inflation to continue. So that's why when they printed the $5 trillion, they are the Federal Reserve. Do you think that they don't know that the $5 trillion will cause a strong, incredible inflation? They know. And because of that itself, right, they actually increase their profit margin against many other countries. And that's the reason why the trade deficit goes down. So all this is actually a plan. So if they are going to stay with what they are doing right now, then they will not cut interest rate at least for the next 6 to 8 months. I can tell you that, okay? So we have also the November jobs opening and labor turnover report, the GOLTS, and it seems to be coming better than expected. Well, that means that the economy is still okay, right? The ISM manufacturing, have a flip side, okay, show that the contraction after 30 months of expansion, okay, so that actually tells you that the impact of impact of the interest rate is coming in. So overall itself is good or bad. Now basically I'm trying to say is this: we need to look at individual, and of course now UBS just downgraded Microsoft, citing there's a weakening outlook for their Azure and the Microsoft Office 365, okay? So that is one reason, and you can see on the Microsoft share right now, oh my goodness. Now I remember telling you guys this about Microsoft. Let's take a look here. Okay, they have a pen, and let me change the color. Right, I mentioned that $235 is a very incredible, important support, and you can see that once Microsoft came there, it rebounded back here, right? But the thing is this, as of yesterday, we saw that because of the downgrade, Microsoft share just plunged below $235, and now it's going to free zone. Yes, free zone in my opinion. So the next level is 218. Oh gosh. Now where we are now, we're 229. So, and the thing is this, if it goes any lower, the major support, okay, all the way since 2021, the major support is 213. And if this go lower, like what I predict about this Tesla going to like $65 and Apple going to 109, there is a possibility for Microsoft to see the magical 200. And so from where we are right now to 200, it's going to be another 10%. And is it possible? Well, technically it's possible. And fundamentally, it is also possible. Let's take a look. Now, fundamentally, is that because now they feel that, okay, the Microsoft multiple now is kind of fair, but it's not cheap, okay? So it means in short, they're trying to tell you that you can go lower, okay? And of course, the Office 365, the one leading product of Microsoft, has a remarkable steady machine of the late, but also show that slow revenue coming in for 2023, okay? As a seat-based company could be hurt by the growing pressure in the labor market. So that's my point. If more and more people are leaving their jobs, that means that all these companies, especially technology company, will be affected. I've already been saying this for the longest of time, and I hope you already heard me, okay? So let's look at Amazon this today. Now, Amazon have been trying to hold itself, and I mentioned to you $82 is a very, very critical support level that we are seeing right now. This came from all the way last in April 2020, that's what, 2 years ago. So $82 really must hold, because if it doesn't hold, oh my goodness, it's another potential 65. Oh gosh, all right. Now the technical is ugly, okay? The technical is ugly, but how about the fundamental? Let's take a look at the fundamental. Well, fundamental, let's bring in. So apparently now the CEO says they're going to cut as much as 18,000 jobs. And although 18,000 is not a lot to Amazon because they have a lot of people they have, but still it's going to affect the whole economy, and things get ugly, right? And the main thing is this, okay? Even though it's only 6% of the 300,000 person corporate, right? But it's still not going to be good, okay? And you must understand, Amazon has more than 1.5 million workers, including warehouse staff, making America's second largest private employer after Walmart, okay? So imagine Walmart is cutting people, Amazon is cutting people. So think about this. And the last time they were saying it was 10,000 jobs, but now they're looking at 18,000 jobs. So it's almost like double, right? So all this thing tells you that something is really wrong with the US market, and you need to be very, very careful, okay? Now, of course, at the same time, some have been asking me, Cal, how come the Hang Seng is moving up on its own, okay? So Hang Seng, as you can see from my view, okay, now Hang Seng since November last year has came down quite a fair bit, okay? It's came down quite a fair bit, all right? But then only around here, about 15,300, I gave a buy call, remember, on Hang Seng. And the rationale was because my Boy's indicator calls for buy, and my KRW tell me that the buying weightage itself is there. So from here itself, you can see the index just basically keep on going up all the way and to today's high, and that was about nearly 21,433. Okay. So why would the boys been buying? That's interesting, right? Because probably they know this particular news. This news came out this morning. Alibaba and other China ADR surged as Ant Group capital plan approval fuels hope for relaxing scrutiny. So in short, we all know that Ant Group was basically not allowed to be listed, and for been 2 years, okay? And of course, many of the China ADR itself also got hit. But I think when really things hit the fans and probably some negotiations done between the higher authority, so now what we have is that right now Ant Group capital could really come back, okay? And this is helps. And of course for Alibaba, that's why it jumps by 13%, okay? That's a fair bit, right? So you can understand now that the technology company in US is not doing well, but the other places are doing well, and especially Chinese ADR. So I feel that, right, that's why price action is very important. So we have the bad side, we have the good side, but more important thing is this, okay? Let's just listen to Jim Cramer on what he has to say regarding about this tech layoff. And of course, again, as usual, in my opinion, he's been flipping around. He was bullish just a couple of months ago, and now he's totally another new person. Let's watch what he says.
And figure out how to monetize the metaverse, doesn't spend more time with Reels, his version of TikTok, then he's going to need to let a lot more people go, along with a lot of real estate. But at the end of the day, this market has become unforgiving to the fat, happy tech companies that hired too many people during the pandemic and are now seeing that they're not taking the tough actions needed to protect you, to protect you, the shareholder. The kind of actions that a steelmaker or a chemical company will do reflexively going into a downturn. They know how to do it. The tech guys, they've never seen anything like this. They don't know what to do. Which brings me to why we see this happening. We've discovered that the mega cap ties.
Alright, so you can see from here itself, right, there's so many recent layoffs, including from Rivian, Coinbase, Microsoft, Micron, Strip, Twitter, Meta, Netflix, and so forth. So all this is telling you that the US economy is going to slide and we're going to enter recession, okay? So I know the stock market has been firming up. I understand, but that is the thing here. You need to be prepared because this is going to hit the fans. And I've been saying this, most likely the impact will come in by the mid of January, which is like probably 10 or 10 more days to go. You need to be very, very careful. So what is happening right now? Because the Federal Reserve has came out, the Federal Reserve meeting minutes has came out, and very, very clear that the Federal Reserve, all of the officials, they are not keen to cut interest rate for 2023. Okay, this is very official, so it's a very hawkish minutes, and we saw the Dow Jones actually coming down. But again, towards the last hour, boys came in and pumped the price up again, and this is creating a false run. So let's listen to what the Federal Reserve minutes has to say to all of us. Okay, let's bring in the video in and listen for yourself. Let's do it.
December Fed meeting, Tyler, showed that no Fed members thought it would be appropriate to cut interest rates in 2023. All of them in their forecast for rates raised the path of their funds rate relative to where they were in September. The restrictive stance most officials believe was needed until they were confident inflation was coming back towards their target. Several said that history warned against loosening monetary policy prematurely. Still, Fed officials said they were flexible in setting policy due to the uncertainty of the outlook, and somewhat contradictory, they said they were still data dependent. However, they emphasized that just because they slowed the pace of rate hikes did not mean that their resolve was weakening about fighting inflation. Participants warned against, quote, an unwarranted easing of financial conditions. I'll come back to that in just a second. Now, they did acknowledge in a very small section in these minutes the risk of tightening too much, but they kind of then dismissed that by saying that inflation is the biggest risk to the economy and the one that ought to be addressed. Participants, they cited the possibility that price pressures could remain elevated. Only a couple saw the inflation risk coming back more into balance. The labor market, they said, was very tight. Inflation was unacceptably high. Remember, the context of the meeting is that consumer spending had been pretty high in September and October, as well as financial conditions had eased leading up to the meeting. Finally,
all right, so basically it's all right. Several has said that the history warns about warns against prematurely losing policy. So that means that history has proven that if you are basically increasing interest rates to curb inflation, you have to do it all the way in to make sure that inflation really goes down. If not, whatever effort have been gone. So while Wall Street is looking for that, but from the Federal Reserve minutes, right, shows the opposite side, and it's all the officials, not even one of them. So all these things tells me that there could be more trouble coming up. So we can see right now the PCE data, the Personal Consumption Expenditure Price Index, less food and energy, was 4.7 annually in November, down from the 5.4 peak, all right, in February. But it's still way above the Federal Reserve 2%, right? So we take away food, take away energy. So the current level now is still 100% above the Fed target. So if you ask me, think about this, the Federal Reserve increased interest rate from 0 to 4%, and that only managed to bring the PCE data from 5.4 to 4.7. So think about this, they had to bring it higher. So that's why in a Fed meeting minutes, they actually mentioned that there could be a higher rate coming up. And this is not going to help. And if all this thing going to continue, then of course you will have that recession coming in. That means the Federal Reserve is preparing people for that. And one of the Fed president, Neil, says that the Fed fund rate could go as high as 5.4%, and that is the number that I was also saying, between 5 to 5.25, and I believe that will really happen. And when that all happens itself, the stock market will feel the pain. Now, one thing is that we've been asking, Kel, if the thing is that if inflation is coming down, then why aren't we celebrating? Because you thought that is the way. No, it doesn't work that way. Let me explain to you now. Now, take a look at this. This is the chart for the last 20 years, okay? Now, of course, I'm being very selective here to show you the impact of the the inflation coming down. Let's take a look here. Now, here itself was in July 2008, and you can see that inflation was at probably about 5, and then what happened? When it started to dive down, right, because there was when the inflation came down, you notice that the stock market also came off, okay? So same thing again back in 2001, when the inflation started to come down, the stock market also came off. And now we have inflation at high as 9.1 at one stage itself, the CPI data. We also saw the stock market coming down a little bit, but recently the pump up is really a big question mark. Why? So with the earnings not doing well, the economy is not doing well, then with the current situation now with the variant going on, what do you expect? I mean, I just couldn't understand why the market is going up right now, because if they just allow it to fall, it would be easier. But of course, again, Wall Street seemingly is holding back and something just not actually right. So I just can't tell you much from here itself, I just tell you that it doesn't make sense. So let's understand financial economy, right? So the thing is this, when inflation goes down, okay, the corporate earnings will drop naturally, right? And then after that itself, in order to maintain their earnings and market caps and not to lose out, they will start to cut people away, okay? Unemployment will shoot up. And when that happens itself, the buying purchasing power will reduce. Of course, when lesser people are working or people are not out of their job, they cannot be spending as much as they can, right? So what will happen again? That will create the buying power reduce, and that will bring inflation lower, because at the moment now, people are still able to afford. That's why the inflation is not coming down. So it's only when you basically hit it hard and makes the corporation really has to think about this by reducing employment, then the whole thing will work, okay? So it's on purpose. What Federal Reserve is actually, they are looking to make the big R, meaning the big recession to happen, so that, okay, things can really move, okay? So you can see over here itself, when the Fed fund rate starts to cut interest rate, you will always see the recession, okay? Every time when they hike the interest rate itself to combat inflation, then once they start to reduce, recession will be next. There's no way this can change this time around. Nothing, okay? So guys, you really need to be very careful on your portfolio, because I know a lot of people are calling for buy at the moment now, telling you it's cheap right now. Guys, there will be one more wave to go, okay? So this is the 60 years chart versus the economy versus the EPS, the S&P earning per share, and you can see very clearly when you put them all together itself that the way it will always bottom is when the EPS comes down, and that comes with the recession, okay? So unless we see the big R, we see the EPS going down, I'm so sorry, there's no way that we could see a bottom yet, meaning we are still far from a bottom at the point right now. And one thing is that look at the annual US IPO activity. You can see very clearly it's a crazy drop. Now last year itself, the IPO itself, the 2 years ago, 2021 was 1,073 IPO. Now last year, oh my goodness, 92. Oh gosh, that's how bad it is. That's the reason why it makes sense for some of the companies like investment banks to cut their people away, because they don't expect this IPO to continue to come in, and usually in a time of recession, there'll be lesser company basically listing it. So all this is good reason to tell you that, hey guys, things is not going to be fine. Now, I want to drive it down to you guys is the Baltic Dry Index. Now, some time ago, people covered this, but no one covered this anymore. I'm covering it right now. Now, the Baltic Dry Index is the index that provides a benchmark for the price of moving the major raw material by sea. Okay? So basically, in short itself, if the Baltic Dry Index is moving upwards, usually means that the economy is doing well, then things will be good. So if you look at it here again, back in September, October last year, when the Baltic Dry Index was doing well, the stock market went up, right? Similarly, back in May itself, when the Baltic Dry Index was up, same thing again, the stock market went up. So the problem is now, guys, we are now coming down. So the economy is really suffering. And it's not only just about US, it's global. And if it's global, then we have an issue here. Let's take a look. You notice that this is the Baltic Dry Index in blue, and whenever it hit a peak, the stock market will always come down. So you have seen before again, when we're at the peak itself, right? When the Baltic Dry Index at the peak, and once they start to come down, usually means that there's lesser exporting of the materials, meaning the economy is not doing well, and of course, generally speaking, the stock market will come off. All right, so you see that? So of course, the thing is that maybe you say that it's still too early to call. No, guys, this is real, right in front of us. You cannot lie about it. So with all these things happening right now, the one that's going to be the drive the nail down the coffin will be this one here itself. Now, I really feel that there's going to be a potential Black Swan event, and it's going to likely be something like what happened back in Wuhan back then itself. Now, this is from the one of the channel from India. Maybe the words are a bit heavy, but I'm just to share with you itself. Apparently, right, they're saying now that this China has this bogus vaccine, okay? And that's the reason why so many people are getting sick at the same time. And you can see now, right, there's seeming some reports saying that Shanghai resident, up to 70 to 80% of the residents are already reported infected. Oh my goodness. Think about this. It's like Singapore itself, right? We have 70% of us infected at the same time. I cannot imagine what will happen. And now China is again threatening the whole world because they are telling people are very afraid of these people from China, right? Because of the virus that they are having in. So they decided that you must do your test before coming in and stuff like that. So you think about this. Last time we want to go China insists that, can't go in, you not pay a very exorbitant fee for the air tickets, and when you go there, it's to stay for like 21 days, 28 days in the quarantine hotels and stuff like that. Now people just want you to give some test result. You are actually saying that you threaten the world. Okay, so apparently now the foreign ministry has said already, right, they are firmly opposed to the attempt to manipulate the COVID measures for political reason. All right, so this is again same thing. We've seen this before, and it's not going to change, guys. It's not going to change at all. And the next slide is going to freak you out a little bit, but take a look, guys. These are the people, just a peek of the iceberg that passed on recently, and I managed to basically get from a YouTuber and look at it. These are all the top brass of the CCP party, and apparently they just passed on just like that. The last 1 month itself, one by one, and this is just a peek of the iceberg. In fact, itself, there's so many of them. But what it's actually trying to tell you is that things is really getting pretty bad for China. And imagine this itself, we are seeing right here now that there are this COVID-19 chaos is spilling to Hong Kong, okay? Spilling to Hong Kong, and it's from China News Asia. And the thing is this, and China is consisting to stay underrepresenting, all right? Meaning they don't want to tell the whole world exactly what's happening. And of course, people are losing faith with the leadership. And you can see from Straits Times, right, the number of deaths seem to be the underreported. They tell us that there's no more new COVID variant. Oh my God, no more? Are you serious? And of course, the crematorium, we can see right now is piling up with bodies, okay? And of course, like Russia, Australia, Japan, all ramp up for testing of the China arrivals. In Malaysia, New Zealand, everyone. So it's again the same thing, right? We've seen it before. It's just repeating what happened back in Wuhan time. And we know that what happened, that the stock market came off, and then what happened? We have recession. Yes, although it was a very fast one, but the market did come off a fair bit, right? And I purposely take from Chinese News Asia. The previous time itself, right, when I took from other media source, some people complain and say that, Cal, you are doing fear mongering. But look, now it's everywhere, my friend. Bloomberg, Reuters, Chinese News Asia, South China Morning Post, all these are official things. It doesn't mean that I started by sharing it early, means I'm actually trying to make things out here. So I don't make money from YouTube, honestly. All right, so all I need to tell you is that, guys, all these are really happening right now, and you really, really must be very careful, because I realized that recently, right, people are getting a bit of sick in Singapore too, right? A bit of coughing and a bit of here and there. This is not good. And of course, will it spread? Why not, right? So this is from Bloomberg itself to tell you the situation in China, okay? Let's hear it out and let you think about what you know versus what's happening around the whole world. Let's take a look.
Purely for political reasons. Obviously, with the wave of infections that we've had.
You can see that the Chinese travelers face new restriction, tightened rules for visitors from mainland China. We have Australia, Japan, South Korea, Taiwan, Malaysia, India, Morocco, US, Canada, UK, France, Spain, Italy. So there's no many countries now all doing this. And you're telling me that this is no joke at all? Okay?
Crowds of hospitals, mounting deaths. The government does need to take some action to show that it's helping the Chinese citizenship deal with everything that's happening around them.
I was going to say, how much does the Chinese public care about all of these diplomatic spats when, in fact, at home you're seeing bodies piling up? Tell us a little bit about how bad the situation is.
Well, I think the absolute number of deaths that we're seeing here in China as a result of COVID is striking. The number of people at funeral homes, the wait that now is required to get a spot at a crematorium is simply put, unbelievable. I mean, we've had reporting that people who've passed away are having to wait, up to 5 days, the body at home before the crematorium or the funeral home can come and get the body. We have reporting that there are long lines, people showing up at 3 a.m. for a spot at the crematorium, to get a number for a spot at a crematorium that is not headed out until noon. And so obviously a great deal, unfortunately, of activity at funeral homes. We have not seen that in the official data. That's partly why there's been this concern in the US and Europe and other parts of the world.
Right, apparently from some places I know it's all right. Usually when you do the cremation, it costs about like 5,000 to 10,000 yuan, all right? But now the cost has shoot up to about 45 to 50,000 yuan just for the cremation. This is really absurd, and this is all not that we try to make it up. It's all happening right now. But it's just because that the stock market is going up and the other medias are kind of saying, okay, this is fine. That is why you don't feel it. But guys, we have seen it before. Let's not play, let's do some prevention, okay? You don't want this to happen, because now this is from CNBC. The XBB 1.5 Omicron subvariant is the most transmissible version of the COVID yet from WHO, okay? So think about this, guys. Think about this. If this is going to spread, okay, spread backward again, like what happened back in Wuhan and to create 2.0 again, and because probably the test now may not be as powerful to test out this variant, so what will happen? Think about this. So now look at it. US now, very interesting. I didn't know that. Until today, their daily cases is about 53,000 people still having this COVID. And recently, there's a bit of uptick right now to 76,000, okay? But if you remember, back then itself, in January last time, it was whereby it shoot up all the way to ridiculous figure like 800,000 people in a single day, alright? So now think about this. If this is not going to be a Black Swan event, that'll be good. But if it really happen, then of course things can get very, very ugly. So all these are stats and statistics that you can do your own research and see what you think about it. But I will definitely going to take myself to some prevention, okay? And again, once again, guys, if you like all my video, just leave a comment like this, alright? And then you will be given a chance to do the spin the wheel lunch with Cal, alright? Thank you guys for the great comments. Keep them coming in. You can continue to put in comments, alright? It's unlimited. Just keep on going in. As long as you are selected, I will be putting a name inside the spin the wheel, alright? Guys, thank you very much. And let's look at the market right now and see what we have for you for today. It's a long video, but I'm sure you're enjoying right now, right? Let's take a look. Okay, so for today, let's take a look at the data right now for the US market. Okay, let me do this. Okay, create this. Now you can see that there's a huge congregation of the market right now. Basically, the Dow Jones is staying around 33,400 area to 32,800 area. This is bouncing around for last 700 points, okay? And what does it tell me? It tells me that it's just a matter of time, things can get very ugly. Now, this is the 90% mark at 33,258. So the market is holding here. So the next target, it will be going, if it's coming down, that will be 32,334. And I'm putting my dollar bet on this. As long as the market stays below the line, 33,258, I believe that we'll see 33,335. Okay, so that will give us about nearly 900 points profit. But if you ask me after this, the next target should be 85% mark, and that's 31,411. Now we have made several profit. We have made money several times from this particular trade. So I'm pretty confident that if the market breaks 32,335, we will see this. Okay, so traders, take note of all these numbers. Very, very important. All right, let's bring in now to today's using the TWB system. Now you can see that right now we have a bit of interesting moving around. So this is the again, this is the BNB RL level, and that is 33,481. And last night, 2 days ago, the market touches that, but pull back, right? So yesterday, it missed the BNB RL by a fraction, and now it's trading around here at this 33,258. Okay, so again and again, and I repeat, the market is holding despite we saw Microsoft, Amazon, Meta, this Apple, Tesla, all not doing well, and the market is holding there. So on one side, is it really very positive, very bullish, or because there's some manipulation at the moment right now? So this one you need to ponder, yeah? Now let's look at this Nasdaq. Nasdaq is definitely on a downward trend, and I suspect that once it blows the BNB support level, which is at 10,760, once it loses that, the selling should bring it down to 10,429. But of course, at the moment now, the market, the KSI is still green, so that the boys are still, holding on, and hopefully they find some strength to recover. But at the moment now, I don't feel comfortable with the market, right? As I said again. S&P 500, let's take a look. S&P 500 is also doing a very strong triangle pattern. And if you look at it, okay, the last time the BNB didn't go anywhere above the RL and SL, this time around is seemingly you need to find a direction. Based on statistics, usually if the previous BNB was not utilized, the second BNB will. So which means that now if the market crossed 38.84, the BNB RL, it will see 39.76. Okay. On a flip note, if the market rose below 37.92, then the downside could be as low as 37.01. So for me, very simple. I have put my view here. 38.35 for today is a very important MLP mid-level price. The market has to stay above it. And today's low itself is 38.36. So it missed it by 1 point. Okay. So that means that the market knows that this is a very critical level. Now, if the market breaks, then we have a problem. Now, today, I believe there's no pivot day because you can see that there's no pivot coming out on my screen. So that means that the opening price is critical. 38.50 is opening price. Above OP is a buy. Below OP will be a sell. All right. Now for China, let's look at China A50. Now this morning, China A50 went up and basically broke the last month high. So it was good, right? It looks good. But then again, and it's above the MA30 and above MA200. Sorry, MA200 is a blue one, MA30 is the orange one. By doing this should actually goes all the way up. But then again, we can see there's a bit of resistance now at this point, and that's about 13,333. It's a technical level that I mentioned before. So let's just see how it goes. If the market can cross above it, then we can see further upside. All right, now again, I say once again, if the Chinese government or the boys are actually leaving US to buy a lot of Chinese stock right now, this actually tells me that China stock has room to go higher. Or maybe the next time if there's going to be any severe pullback, it will be a buying opportunity instead. All right. All right, so let's look at Nikkei now. Nikkei is now have been sideways for the last few days, long tail at the bottom, but it's heavily resisted at the BNB support level, and that's 25,952. So this morning the high was 935, misses by 20 points. So as long as the Nikkei doesn't go above this BNB support level at 25,952, the selling pressure will still be there. KSI and KRW both are red, so that's why the red arrow is there. The selling pressure is there, so traders, you need to go slow. Yep. Now for crude oil, let's take a look. Now just now earlier I saw my good friend brother Zhang Yaotong was just asking me what's my view on crude oil, and I was just sharing with him this. Okay, so I'm gonna repeat myself to let you hear what I share with him. I told him that most likely crude oil will come down to 71.70 because this is the BNB extension level. The market yesterday broke down. Yes, yesterday the crude oil price broke below the BNB support level at 76.56. Now, why we know it's coming down? Because yesterday I mentioned to you, right? The KSI and KRW both turn red. That's where the red arrow appear. Hence, therefore, yesterday was a very good day to sell crude oil. Crude oil plunged yesterday from $77 all the way to $73. The low was $72 instead. So this tells me that the world economy is really got a problem there, because usually crude oil and the world economy is kind of like the same movement. So if the Baltic Dry Index is coming down and the earnings are coming down, crude oil will come down. But of course, once it comes down deep enough, like $71 or $69 or maybe this $65, that will be a good time to load into crude oil, because I feel that usually when there's any Black Swan event, one thing that I always observe is that crude oil will actually go up instead. All right, so one thing to take note of that. So a bit unorthodox here, but this is something that I observe, so I'm sharing with you right now. Okay, and last but not least, let's look at the gold and silver market. Let's take a look. Gold has continued to go up by 1854. Seemingly it's a strong resistance. So I will tell you this, guys, don't jump into the market right now. But if you really want to, the next target is 1877. A bit a long shot to call for. Usually the BNB RL times 1.1, the extension will form a resistance first. I think that if the dollar is going to go up, right, let it come down first and then buy again from the bottom. I think there'll be a better price, right? Think about this, huh? But KSI and my KCX, both of them are pretty positive, so that's why the downside is going to be tough. Now, silver, interesting. It has been very strongly resisted at $24. You can see multiple long tails, tells me that maybe a pullback will be good. If silver can pull back, gold will come down definitely. Hence, therefore, about $22 will be a better good deal. But of course, if the market can break $24, then of course the target next will be as high as $25.60. Wow, that's a pretty good level. Yep. KSI and ESKW both are positive right now. Last but not least is the cryptocurrency market. As I mentioned again, yesterday Bitcoin tries to go up but hits the BNB RL at 17,000 and pulls back down. Now it's trading at 16,840. So again, it may try the 17,000 again. KSI and KCX are both positive. So it is possible to see this point again at 17,000. But same thing here, if the dollar strengthens, the reversal may come in, 16,220 will be next. And in my personal opinion again, I still think that this Bitcoin will see 12,000. I've been saying this many times. I know that people have been telling me maybe I'm wrong, but it doesn't matter. I'm just sharing you my view. Now, Ethereum, yesterday I already told you Ethereum will hit 1266. Brilliant. It really went up, touched my 1266 and then pull back. So again, this is the impact of the TWB system. Okay, whatever we say, what we do, usually it seems to happen. All right. So now what we see now, if the market can go above 1266, then it will be pulling back to a BNB RL, and that will be at 1233. Now, if you can go above 1266, then today's pivot is 1284. Okay, so you ask me, I'll say that go slow. Yeah, let it pull back first, then you look for buying. Alright guys, today's a very long video. I know that, but the information is crazy, right? So I really hope that you utilize it and make good money from the market. And we're going to do a charity drive very soon. So join us if you make money, and let's just do a bit for the society. Alright, this is Cal signing off. Have a great day. Bye bye.